I think the two key messages investors should take away from my presentation today are firstly that we're in a new investment regime, and the simplest way to characterise that is I think that 2% is now the floor for inflation rather than the ceiling. And then secondly, the implications that's got for investor asset allocations and positions, because an environment of perhaps higher average inflation, maybe more volatile inflation, is really going to have an impact on asset class correlations. And I think they're going to have to look beyond bonds and equities to provide diversification in the coming years. What makes me excited about investing in the flexible sector right now is really the ability to go anywhere and own anything. So the Ruffer investment company is totally unconstrained. We can use a whole range of different asset classes, and I think that's going to be really key for delivering capital preservation and positive returns in the coming years, where there's lots of cross-asset class changes, there's lots of mega trends, whether it's more volatile inflation, geopolitics, fiscal deficits. And I think we're going to have to look beyond the major asset classes into things like commodities, potentially derivatives. And being flexible means we can try and protect investors in that environment, but also capture opportunity. The thing I've enjoyed most about the showcase today has just really been the barrage of questions that I've had. It's great to see so many investors interested in the investment trust sector, which has obviously had a bit of a tricky time in the last few years, but clearly there's an appetite, and those questions are really interesting, and it's great to engage with people face to face.